Hi, this is Randy Finney with the right side of the chart, and today is Friday, January 19th, 2018. In this video, we'll take a look at some of my favorite picks right now in the specialty and generic drug manufacturing sector. Um, Here's the watch list. This includes all the drugs, or well, I should say the majority of those in the sector. And I've gone through here. That's a total of 75, but I've narrowed it down to just about a dozen or so of my favorites. Most of these are longs. There's a couple potential, two potential shorts, but a lot of longs. If you keep up on the news, you may have noticed, and if you haven't, then Google search this and look into it. Just the other day, it came out. A lot of the generics got knocked down pretty hard, including one which is an active trade, and I still like that, and we'll get to that in a second. ENDP, Endo International. But the news was there's a group of hospitals are looking into making generic drugs. The reasons they claim they're in short supply. They think the drug manufacturers play a game of reducing supplies, creating shortages so prices can ramp up, et cetera, et cetera, et cetera. So number one, even if that comes to fruition, it won't. They don't expect those generics to come available until 2019. It may be a pipe dream. They're looking to raise money from what they call do-gooder philanthropists that agree that the drug companies have too much power, and they're trying to solicit donations and raise funds. So again, whether it happens or not, and whether they're effective, it's very difficult to manufacture drugs. You have to have, extremely sanitary, plants. Now they may farm a lot of this out, and they even said that they may farm that out. But again, look into that. Do your own due diligence. I want to say I think this is one of those opportunities where there's an overreaction to news, and it knocked down a lot of these generics recently, and which I think creates a buying opportunity. Most importantly, the charts are bullish, and I wouldn't be doing this video otherwise. As you guys know, I do factor fundamental analysis into my trading, especially when it comes to swing trades and trend trades, that might last more than just a few weeks. But with that being said, you need to have confirmations in the technicals. So I'll go over that, give you the basis for some long trade setups here, where they might trigger an entry, and some of the price targets. So let's go ahead and dive into the charts. I'm going to move this watch list to the left here, and again, these are the stocks we'll cover, the ones that are flagged right here. So starting out, we'll do this in alphabetical order. ACET, Seto Corp. Um, you can see what looks to be a nice inverse head and shoulders pattern. Now, on the chart, I have marked that strong divergent low. You can see the bullish divergence right here, positive divergence, and so far the stock has moved up. And let's just mark this for those of you not familiar. Inverse head and shoulders patterns are bottoming patterns, and it takes the shape, like the name implies, of an inverse head and shoulders pattern. There's your left shoulder, head, right shoulder, and the pattern would project. If you take the measured target of a inverse head and shoulders pattern, it's the distance of the head to the neckline, and I showed you a minute ago a slightly downward sloping. We can do it like this if we want to capture that shoulder there. So essentially what you have here is a breakout and a back test of the neckline. There's roughly the measured target if I did that right. Yeah, that to where it breaks out. And that would bring us all the way up here for a nice gap backfill. It's amazing so often how the charts line up with these pattern measurements. This is again the projected measurement of a inverse head and shoulders pattern that comes right to a gap fill. So there's your target potential, about 1590. We're back testing now. Whether this pans out or not, only time will tell, but I can tell you this is about as objective as it gets. There's about a 42% profit potential if that target's hit. And when I say objective, there it is. You're back testing, which is support. So if the back test holds, great. Now I can also tell you down around the bottom of those shoulders right here, roughly, you should have support. There were a couple reactions there. So, I give this a little room. Sometimes they might try to, the pattern may be foiled a little bit. But there's your stop down around, just below 1015. Again, if you're shooting for that uppermost target, if you're just trying to shoot, let's say to the bottom of this gap right here, you can see where that reaction was, and that would be a more shallow target. You'd have a more aggressive stop, probably not too far below current levels. But I do like that one, and this may be added as an official trade idea. Let's move on to the next one. AGN, Allergan. Nice divergent low. You guys know I like these bullish divergent lows when I'm going long. Here's a divergent low back here, right here at this point, And from there, the stock went, oh, sorry, I can't grab right on a trend line or it moves it. And I don't want to move these lines, but let me just do it this way. And that was good for about a 40% rally off that divergent low from the low to high. And now we've come full circle. It's been over a year since that last divergent low. We have positive divergence in place. I like the fact that PPO is crossing above that zero line, putting us back into bull trend territory. And you have some resistance to clear right here, a resistance zone, as you can see, from about 180.86 to 185.25. So this one has a little work to be done, but if it clears that level, I think we're good up here to about the $200 level, 201, and over time possibly 219.41. And you can see a long-term trend line coming in down here as well, and that would be a natural target. So a lot of upside potential on this one. And like anything else, take your preferred target. If you're a longer-term investor, trend trader, and you're shooting for these upper targets, use a 3-to-1 risk reward ratio. Calculate how much upside potential and then allow for some downside loss. So I think at most you want to allow maybe a slight undercut of the recent lows. And again, this one may be added as an official trade idea, but like I tell you guys, when I see a sector and a lot of ideas pop out, a good example was the last video I did on the energy stock, the natural gas and MLP stocks. There were just so many out there, and therefore I like to take a shotgun approach. I covered that, and the vast majority of those stocks have gone up, and they've gone up nice, well into double-digit gains. But again, when there's so many, at times it becomes overwhelming, and maybe I'll pick one or two, but I can't possibly track all of these as official trades. So I do these videos, and you guys take notes, screenshot these charts, replicate them on your own, and if you're a member of the site, just drop a line in the trading room if you want an update or more specific price targets, and I'll be glad to do so. ARDM. Obviously, this one had the snot knocked out of it recently, you can see, but that was priced into the charts. There's that divergent high. You guys know I like these divergent highs for shorting ops. We had negative divergence, very clean, clear separation of the peaks and the PPO and the RSI, and that divergence played out. And corrections can play out over time, or they can happen swift. This one's swift. The scope of that divergence based on this drop, this stock has dropped in just a week or so, dropped 72%. I think it's safe to say those divergences or the expected move down has played out and then some. In fact, this one had support right here. You can see that's where, and it stopped the first day and then a gap below. This one is, I don't know what happened. We'll have to look into it. And I suspect it has a lot to do with what I just talked about, the news on the hospital groups trying to get together and start their own generic drug making company, if you will. But there it is. Things get ugly, a little more support down here, but I like this one here. I think it's low risk at this point. Seems to be flagging. It's possible. Might have to. This one I want to read up. I want to read up and see what happened because that's a pretty big drop. That's an overreaction, I think, to that news the other day. And but if the fundamentals check out, if there's not any glaring red flags here, I might step in here around the $2 level and look for a bounce trade, maybe a backfill, bounce back up to this 320 level, 329 level. And that is ARDM. ENDP, this one's an active trade on the site. We've had this one on for a while. This was the first target. We zoom in down here. 743 was the first target. I forget the percentage gains, and I forget exactly where we were. It must have been maybe somewhere down here on a break of a wedge. And this one, it's crazy. The target, I guess in hindsight, I set it a little too tight. I had resistance at 918. I set the second target at 912. As you guys know, I always set my buy to cover or sell limit orders just below the actual resistance level in case stock reverses just shy. Well, here's a case of one reversing just shy. You can see all the reactions. I feel confident that I placed that line 918 at the right level. I feel very confident that's the resistance. But as sometimes happens, sellers step in. They see that resistance if it's well defined, and sometimes you have the sellers that step in ahead. We missed that a fill on T2 by pennies here. 912 was our target. This one went to a high of 901, 902. So we missed it by 10 cents so far. I still like this one. The recent sell-off was, again, that was undoubtedly based on the news that I talked about with the competition from that hospital group trying to talk about making their own generics. But I like this one. It's still active. It's still well within the maximum suggested stop if you're targeting T4, which I think gets hit over time. So far, we're slightly undercut the downtrend line. This trend line goes back a couple of years. You can see it there. There's your primary downtrend line, well defined. So, if we looked at a weekly chart, that trend line, this we haven't closed yet below that. If we close where we're at today, yeah, we'll close slightly below the trend line, but not by a whole lot. And I put a support level here about 688. You can see a couple reaction lows right there, reaction high. So this one's at support. If you're not already long, you might want to just hold off, see if it can recover, see if it bounces off this level and gets back above that trend line. Okay, if it does, starts moving up, I think it'd be very good chance that we'll continue on. We'll take out T2 and we'll move on up to T3 and ultimately T4. But if you're still long, again, stick with your stops. If you're only targeting T2 or T3, you might want a more aggressive stop than the maximum stop that I put. And again, those notes go on the site. You can read the notes on this trade, but I just want to mention that I do like it. Does suck that we missed that second target by 10 cents. It would have been nice because I had planned to book some profits there and then recycle on a pullback, but oh well, still holding that one. EPIX, uber aggressive, 22 cents. Need I say any more? Anytime you have a penny stock, a stock below $1 a share, you can look at these candles, how funky looking they are. That means it's very thinly traded. However, it is worth noting there's strong divergence here, very strong divergence, positive divergence on the PPO, the RSI, there it is. And there's a downtrend line. Yes, it's choppy. This thing is prone to these little whipsaws because it is thinly traded. It doesn't take a lot of buying pressure to move a thinly traded stock. But I can see a falling price channel here with positive divergence. And if this one pops, I think it's good up to about 50 cents. And again, risk reward go hand in hand. There's a lot of risk in this, but a lot of reward. That's about a 93% gain if it happens. So watch for a breakout there. Ideally, you want to see it on above average volume. LCI, Lannett Company, or Lannett Company, not sure how to pronounce that one. Looks pretty good. Actually, very good. I like this one. What you're seeing here is a breakout and a back test. Let me go to a 2-day period chart. There it is. Here's your downtrend line off the early 2015 highs. Fairly well defined. Nice breakout. We had bullish divergence in place, not really shown here on this chart. You'll see it on the weekly here in a second. There's your bullish divergence. So we had a divergent low, everything I like to see. This stock, I think it's safe to say, well, in hindsight now, we can say the stock bottom because it's almost doubled from there. See, that's about 100% gain. Yeah, it's a true double off the lows. And this is a constructive looking chart. This is sure it's a nice sharp correction recently, but that's a healthy pullback in the bigger picture, in the bigger scheme of things there. So there it is. And in trading, it's trading 101. You go long on a break of resistance or on a pullback to support. We back tested once. We just back tested again today, and so far, or yesterday, hammered off that level. So it looks good. There's my note to check out the weekly chart. There it is. Back here, imagine these are my notes. I probably pointed this one out at the time. Divergent top, breakdown, and that was a time to get out of it. I must have been using the MACD because I don't see the line on my PPO. There it is, negative divergence. These are your. This is the swing or trend trading chart right here, a weekly chart. You look for these divergent highs and divergent lows, and that's what we're looking at now. Just like we had a divergent high here that led to a 80% drop in the stock, we had a divergent low right here, and a falling wedge pattern. We broke out, back tested. So again, whether it pans out or not, I cannot make that promise. I don't know, but I can tell you this is about as objective as it gets. You go long here on the back test, stop not too far below for the next thrust up in what may be, a new bull market in this stock, LCI. Targets you can see right here. These are I'd have to modify this chart a little if I put it up as an official trade, but let me just tell you right now, this is the area I'm looking at as the next swing target, right around $30, and the stock's at 24.20 now, so that's not bad. That's about a 24% move if we get there. MYL next. And this one is a potential short. What stands out on this chart? Well, you can see the the negative divergence right here on the PPO, almost divergence on the RSI. The RSI made a slightly higher high. However, simple yet effective. When we go back, this is 2 years of price history here. Last time, well, the first time we were oversold right here was at this point. There was your drop. Then we were oversold here. There was your drop. And we were oversold right here. So there was your drop. And now we're oversold. So I think this one comes back in longer term. I think this chart is constructive. Let's take a look at that weekly chart. Yeah, the chart is constructive longer term. I don't know why I keep losing lines here on the PPO, but there it is. So here was a bull market run, very well defined uptrend, and that terminated in a divergent high. You can see negative divergence at the high. The stock from there corrected about 60%. Nice bear market there. A little over 60% actually. If I go down to the lows, yeah, 62%. But you can see we had a downtrend line here. We had a divergent low. So the stock has come full circle. Bull market, bear market. Bull market now looks that way to me. It looks like it's bottomed. But again, I showed you the case that it's up at resistance, overbought, so it's probably going to pull back. If it came all the way back here, and it'd be a pretty nasty correction, but if it comes back in and back tests that trend line, that would be an objective long entry, assuming the charts confirm at the time, meaning the daily, the intraday. Take a look at the sector, and that's MYL. Next up, OPK, Opko Health. There's a nice divergent low. It's not confirmed yet, but any more upside, and it would be. You can see right here we haven't had a bullish cross yet on the PPO, so we effectively have not put in a a higher high on the PPO until we get that bullish crossover. That's what I like to see. Same on the RSI. So there's potential divergence. The resistance up here around 515 to 528. Next level, which would be a swing target about 588. So a lot of potential, but again, still work to be done on that. That'd be about 34% if that 588-ish target's hit. And we may come here to backfill that gap all the way up around 644. I have a note to check out the weekly chart. Okay, so this helps to confirm. Here's a stock. It is at support on the weekly. There is potential divergence, still unconfirmed, but you can see the RSI and the PPO here making higher lows right now. This 421-ish level you can see acted as support back here for months, many months, support and resistance. So there's a stock at support on the weekly with potential but unconfirmed divergences. So this one wouldn't be an active trade just yet. There's a little work to be done, but I think it's worth keeping an eye on. Orex. This one, again, aggressive. We're right around the $1 level. We're not a penny stock yet. Now, I like that often. Very often when stocks fall to this level, they will defend it aggressively. Insiders will buy the stock. They do what they need to do to keep it above that $1 share price in order to prevent a delisting. Because when you go below $1 a share for too long, you're usually delisted from a major exchange. So right now, we're above that level. It might want to thrust down and test $1. Sometimes you see that, but so far it's bouncing around support at 115. So one way, very aggressive stock to begin with, but an aggressive entry. You can buy it at support here at 115, although it could be dead money for a while. It's traded sideways on that level for a while, but you could buy it there with a stop somewhat below. You got to give it a little room. These low price stocks can swing. If you have a 2-3% stop loss, I can all but assure you you'll get stopped out in the daily grind. So you got to give it a little bit more than that. And remember, your stops are all relative to what your profit potentials are. This one, I don't see any resistance up here, other than that trend line, of course, that downtrend line, but there's about a 35% upside to that 158 target. And if it takes out that downtrend line, that would be bullish. So what I would see happening in this one, if the trend line's breaking out, that would be your first buy signal. So you can buy it at support, maybe a partial position if you want, or wait till the trend line's taken out, add to the position or initiate a position there, hits 158, maybe a back test, and then boom, off to the races. And this one has a lot of upside, and there must be something on the weekly chart worth noting. Yeah, oof, nice. Look at this, all the way back to 2015, a well-defined downtrend line, steep bullish falling wedge pattern. Potential divergences, looks like that PPO is starting to turn up. The RSI, we have divergence in place. So this is setting the way for a major trend reversal. This could be, again, it's very aggressive, high risk. You don't have to put a lot into these low price stocks, nor should you. Because if this one does pan out, let's say this wedge breaks out and we head up here to this 584-ish area, you're talking a return of 375%. So take a small fraction of what you might put in a normal swing trade. Again, if you are an aggressive trader and this meshes with your trading style, that way if it goes against you because a stock flirting with the $1 level, you may wake up one day and that thing's filed for bankruptcy and you've lost almost all your money. So again, don't put in more than you're willing to lose on those type trades. PCRX, PCRX looks pretty good. I like this. This one, of course, took it on the chin with that news the other day about the competition for the generics, right down to support. You can see here we had a divergent low right here. That was good for a nice rally, 44%. We had a divergent low here. That was good for a climb of 100%, doubled your money. We had a divergent low right here as well, and that was good for a run of 59%. All right, wash, rinse, repeat. Now we can't catch, we don't have a divergent low right now, but what we do have is a stock that has dropped just in the last couple weeks, fallen about 20% down to a very well-defined support level. You look back to the left of the chart, you see reactions from above. Again, this is a support zone, these two lines here. So we have reactions from above, below, some reactions around there, reactions here, and there it is. So again, on a long trade, you either buy a breakout of resistance or you buy a pullback to support, and the stock is close to being oversold. If you do step into this one, there's a gap right here that may need to be backfilled, so you want to give it a little room. I would set my stops somewhat just below that $37 level, somewhat below that, maybe on a daily close. And I think the risk reward's good because if it holds support here, I think it can power back up to the top of that range again, and that would be, roughly 26% move. And I don't have any notes on the weekly chart there, so let's move on to the next one. PSDV, here's a divergent low right here. You can see the bullish divergence in place. It needs to take out this 115 level. There's some resistance there. And if it does, that probably runs back up to 138. And what this is a large, basing pattern here. It looks like the stock is trying to pound out a base. So you can swing trade within the base, move from 115, maybe take profits on the run up to 138, or hold off and wait for a break above that level. If it breaks above that level, it's probably coming all the way up here to about 165, and maybe more down the road if this is a bottom in the stock that's trying to pound out. I should have made note on the weekly chart as well. We're at long-term support. You can see these reactions back here from late 2011, early 2012. So you have a stock at support. Bullish divergence too. I could draw up some divergence lines there on the weekly chart. All in all, potential bottoming play. 3 more to go. PTX, Pernex Therapeutics Holdings. Not one of my favorites, but some potential. It keeps dancing around this 232 level. You can see, and it's fairly thinly traded, so you get these spikes. You can see these candlestick wicks, shadows and wicks. Those are intraday spikes where the stock closes back. So keep in mind if you're trying to trade this one, it is objective to go long here around the 232 level, but you're just going to have to give your stop some room. So take your position size down, and it could be dead money for a while. But the bottom line is watch this spacing pattern here. Downside break. This one proved to be fleeting, but if we get a impulsive downside break, that's bearish. However, if we can break to the upside above 315, that would be bullish. And here's Radius. I made what I thought to be a very strong case for a long in Radius. This was one of the quite a few trades where I got the call right, but that stops were just a hair too. We got clipped. If I remember right, the stops were clipped. I still have a long position I'm letting ride for a while, but it's coming up to my final target. Actually, I have this downtrend line. This is where I think we go, but I did have a target up here, resistance level right around 38. And again, I really thought I made a good case for this one fundamentally, and I like it technically, or liked it then. I wouldn't chase it now. I just want to do an update for those still in it. So we're coming up to this $38 level. I see quite a few reactions there, so maybe a little pullback, and ultimately this downtrend line is what I'm targeting. And if that gets taken out, that's bullish. But I think that first tag that we have, or the next tag, since we haven't visited that downtrend line in a while, we get a reaction, a pullback, and then I'll look to maybe position a long on a breakout, reposition long if we break above that trend line. So that's Radius. And finally, ZTS, last one. Um, Really anticlimactic because this is not one of my favorite. Potential short, you have negative divergence here, negative divergence, potential divergence on the PPO and RSI. If it does pull back in, there's your pullback targets, but I'm not crazy about shorting this one. I'm not going to do it personally, but I just flagged it just because that divergent high stood out to me. So if you want to take a shot at it, for those of you looking for shorts in the sector, maybe a pullback to $66. It'd be a nice short, about 13% or so, but you need a buy signal. You need to see something with these candles. I don't really have a well-defined uptrend line, and that's one reason I'm not putting this on as a short trade. There's also some support there around 73.66, but there it is if you're interested. All right, that's it. Again, some of these may make it on as active or official trades, but if not, I wouldn't have covered these stocks if I didn't like them. So if you like what you see, you replicate those charts on your own. And again, feel free to drop me a line in the trading room and I'll give you an update whenever you like. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.